Welcome to this final class in the series on financial literacy, choosing a financial institution and related products. Today we'll look at some key factors to consider when choosing financial products and services, as well as some tips for finding the right providers. Whether you're looking to invest your money, save for retirement, or simply manage your day-to-day finances. Much like playing a game of Jenga, maybe you've had some of these personal financial challenges in your life, or will have. Have you ever bounced a check, used a payday loan or a cash advance from a credit card, had to dispute a fraudulent charge on your credit or debit card, ever closed a credit card account, used a pawn shop or title loan service, negotiated a payment plan with a creditor or lender? Have you ever co-signed a loan for someone else? Have you ever applied for a credit card and been denied? Had to freeze or lock your credit file to prevent identity theft? Invested in high-risk investments such as cryptocurrency or penny stocks? Have you ever been scammed or experienced financial fraud? Have you had to negotiate a significant financial settlement? Have you ever had to deal with a major unexpected expense? Have you ever been unemployed or underemployed? Have you ever worked with a financial planner or advisor? Had to borrow money from friends or family? Or only dealt with a financial emergency while traveling? These are just a few of the many different financial situations that can occur in our life. There is a participant's guide called You Can Bank on It that is associated with this training. On page 41 of that participant's guide is a pre-training survey, which if you like, you can pause this presentation and take that survey. It will give you an idea of what you already know about the topic. It generally takes less than 5 minutes to complete, and then you can restart this presentation when you complete that. Today, we will discuss how your needs should determine which financial products, services, and providers you select. Banks and credit unions are financial institutions, offering a wide range of products and services to help you manage your money. The term bank will also include savings associations for the purposes of this training. Financial institutions accept deposits and loan money. They also offer checking accounts and savings accounts. Savings accounts pay interest. Checking accounts may or may not. If the account pays interest, the more money you deposit and the longer you keep it there, the more interest you will likely earn. Financial institutions may lend money by offering credit cards, auto loans, student loans, and mortgages. You usually pay interest when you borrow money. You may also pay other fees. How much interest you pay depends on the interest rate, how much money you borrow, and how long you borrow it. The interest rates financial institutions charge for loans are generally higher than the interest rates they pay on the money in deposit accounts. This is one way they make money. To introduce us to the topic of choosing your financial institution, we have a video from YouTube. It's called It's a Money Thing, Choosing Your Financial Institution. And if it is not playing automatically, if you click the mouse again on the middle, and if you need to, if the link's not working, you can actually Google or go to YouTube and just type in It's a Money Thing, Choosing Your Financial Institution, and you'll find that video. And once you complete watching that video, if you need to, you can click again and move on to the next slide. Banks and credit unions are similar, but they have some key differences. Banks have customers, credit unions have members. you must meet a credit union's criteria for membership to open an account. This may be based on where you work, live, worship, military service, or on the associations you or your family belong to. Banks generally do not have these limitations on who can open an account, just your creditworthiness. Credit unions are not-for-profit organizations owned by their members. Most banks are owned by shareholders, which means they are for-profit businesses. Other banks are owned by people who deposit their money there. These are called mutual non-stock institutions or mutuals. And the products and services that financial institutions offer can differ. Most will offer at least one basic checking account and savings account product. But other products and services may vary, such as the option to access your account on a mobile device or the availability of automated teller machines, ATMs. And banks and credit unions are regulated and insured to keep your money safe. The Federal Deposit Insurance Corporation, or FDIC, is an independent agency of the United States government. It protects the funds depositors place in FDIC-insured banks. The National Credit Union Administration, or NCUA, insures deposits at credit unions. This insurance is called share insurance. Since the FDIC was established in 1933, no depositor has lost a penny of FDIC-insured funds. You will notice that the FDIC or NCUA logo will be prominently displayed in a branch's location as well as on their websites. Insurance of at least $250,000 per depositor per FDIC-insured bank per ownership category, for instance, single account, joint account, and certain retirement accounts, for example. To verify what financial institution is FDIC insured, you would go to the website fdic.gov and use the Bank Find button to find that, or contact them at their toll-free number 1-877-275-3342. To learn more about deposit insurance, including what accounts are and are not FDIC insured, go to the website fdic.gov/deposit. The National Credit Union Administration, NCUA, insures deposits, of course, at credit unions. To verify that it is insured, you would go to mapping.ncua.gov or use their toll-free number 1-800-755-1030. And to learn more about credit unions, go to mycreditunion.gov. Why is deposit insurance important? Well, on Friday, March 10th, 2023, Silicon Valley Bank was closed by the California Department of Financial Protection Innovation, and the FDIC was named receiver. The bank failed. If you had money deposited in their bank, you would be grateful that that deposit insurance meant your money was safe. This slide refers to page 5 in your participants guide. Financial institutions may offer access through their retail locations, their branches. When you have an account with a bank or credit union that has multiple branches, you can use any of those branches to meet your banking needs. Automated teller machines, ATMs, customer service phone numbers, and email. Also, websites that offer online account access, or mobile banking services such as smartphone apps. Now, later in the training, we will be talking about online or mobile banking, including bill paying service. We'll also cover mobile person-to-person payments, also called P2P. If you need reasonable accommodations to access services, let your financial institution know. For example, financial institutions may use relay calls, including video relay, arrange to have a sign language interpreter on site, offer materials in audio and braille formats, provide ATMs that have accessibility features such as voice instructions or braille on the ATM keypad, and provide captioned videos on websites and other features to enhance accessibility. See page 6 in your participant's guide. Financial institutions offer 3 general types of products and services: deposit products, such as checking and savings accounts; credit products, such as loans and credit cards; and other products and services, such as cashier's checks and money orders. Here are listed some of the deposit products. With both checking and savings accounts, direct deposit allows your money to be safely and securely electronically deposited into your account. Savings account is used to set money aside for the future. People usually use savings accounts for money they do not expect or need on a regular basis. In fact, there are generally limits on how often you can take your money out of a savings account. There are generally no limits on how often you can deposit money into a savings account. Now, money in a savings account earns interest. A checking account is a transaction account. It's designed for individuals to deposit money into it and take money out of it frequently. People usually use checking accounts to keep their money available for paying bills and withdrawing money for regular use. Money in a checking account may earn interest. A certificate of deposit, or CD, is used to set money aside for the future. It's not the same as a savings account. You need to keep the money in a CD for a certain period, or you'll likely have to pay a penalty or lose some or all of the interest you earned. The required time could be 3 months to 5 years or more. There may be required minimum deposit. CDs typically offer a higher rate of interest than regular savings accounts. Lastly, money market accounts may also be offered by some financial institutions. These accounts usually pay a higher rate of interest than a checking account and require a higher minimum balance than some other account options. They do not require that the money remain on deposit for a certain period like CDs do. With credit products, you borrow money from a financial institution. You usually pay interest on the amount you borrow. Credit cards are revolving credit. That means you can borrow money repeatedly up to the credit limit. You pay at least the minimum payment amount by the due date shown on the monthly credit card statement. If lines of credit are like a credit card and allow you to borrow money up to a certain limit. Installment loans are generally repaid in equal payments over several months or years. Installment loans can be used to finance consumer items such as appliances, cars, trucks, education, or personal expenses. The final payment on some installment loans may be different than the regular payment amount. And mortgage loans are secured by your home, usually to purchase it or refinance on an existing mortgage. They are usually installment loans. Other products and services help you manage your money, send money somewhere else, or pay bills, for example. Let's talk briefly about some of these other products and services. Check cashing is converting a check to cash. You'll generally not have to pay a fee to cash a check at a financial institution where you have an account. Money orders. Money orders can be used to send money, such as to pay bills. With a money order, you provide the amount of money you want to pay someone else plus a fee to a bank, store, or the postal service. Then you give a piece of paper, the money order, that may look like a check that you can use to send the money. You do not need an account at a financial institution to get a money order. Prepaid cards. With prepaid cards, you're spending the money deposited into them. They usually aren't linked to a checking or savings account. Instead, you or someone else, such as your employer, load funds onto the card and then you use those funds to make purchases and get cash. Each time you use the funds, the balance on the prepaid card goes down by the amount you used. Sometimes you must pay a fee to use the money on a prepaid card. Debit cards. There, you are spending the money that is in your checking or savings account. Each time you use the card, the balance in your account goes down by the amount you used and possibly also by amount of a fee. Now, debit cards can be used at automated teller machines, ATMs. They can also be used for purchases, both online and at point of purchase, such as at a store, restaurant, or gas station. Cashier's checks. These are checks guaranteed by a financial institution. Automated teller machines, ATMs. These machines can process a variety of banking transactions, including accepting deposits and loan payments, providing cash for withdrawals, and transferring money between accounts. ATM cards. ATM cards allow you to use an ATM for various account transactions. You might also be able to make some purchases with an ATM card. Online or mobile banking, including bill paying services. This refers to managing your accounts using the internet on a computer or mobile device. You can view up-to-date information on your account balance to help you reconcile your accounts on a more frequent basis. It may include bill pay services, where you can set up automatic payments for your account to pay your bills. Some financial institutions can alert you when you have a new bill to pay from some companies, such as utilities. Many online and mobile banking tools allow you to deposit checks remotely. You use the financial institution's mobile app and take a picture of the front and back of the check you want to deposit. You may have to write specific information on the back of the check first, such as for e-deposit only. The specific steps vary depending on the financial institution. The instructions are usually provided on the mobile app. If you have any questions about using a mobile app to deposit a check, ask a customer service representative at the financial institution. Person-to-person payments, or P2P. This refers to mobile apps or other web-based services that allow person-to-person money transfers. Typically, users link the mobile payment system to their bank accounts or credit accounts and initiate transfer of funds to others who are also users of the same app or web-based service. Examples: Venmo, owned by PayPal, is one of the most popular P2P payment platforms. Zelle, like Venmo, enables users to make direct P2P payments instantly. Wise, international company, Wise is a specialized P2P money transfer app. And there's Google Pay, PayPal, Cash App, Pop Money, and others. One may let you transfer money after logging into a website. Another may let you transfer money by physically touching your phone to another person's phone. This is a rapidly changing area of financial services. And lastly, remittance transfers. These transfers are used to move money to a person or business in another country. This may be also referred to as international wires, international money transfers, or remittances. See page 7 in the Participants Guide. Businesses other than financial institutions also provide some financial products and services. Often they extend credit or provide certain services such as cashing checks. They generally do not accept deposits. Some examples include convenience stores and U.S. post offices that offer money orders, stores that sell prepaid cards, check cashing stores and outlets that cash checks, payday lenders that provide small dollar short-term loans, pawn shops that provide small dollar short-term loans, vehicle title lenders that provide short-term loans based on a clear title to a car, truck, or motorcycle. And these businesses may offer features such as being open late at night, or they may allow you to borrow money without checking your credit or verifying your income. However, their products and services often cost more than similar services at financial institutions. See page 7 in your Participants Guide. Some questions to ask ourselves. How do you choose financial products and services? How do you select a financial institution? There are many ways to select financial products, services, and providers. One way to ensure you are getting what you really need is to start with your financial management needs. Financial products, services, and providers can help you save, spend, manage, and borrow money. Your financial management needs may include having cash on hand to buy things you need, building credit, saving money, and/or paying bills. Before we look at your financial or money management needs specifically, we're going to look at a scenario and figure out the products, services, and providers that may help Susanna. Please go to page 8 in your participants guide. There's a scenario here, and you're going to read that. It's Susanna considers what she needs to manage her money, and there'll be a few questions to answer afterwards. So you'll pause the presentation, read the scenario, answer the questions, and then restart the presentations when you're ready. Welcome back. So let's review the questions. What are Susanna's financial management needs? Cash or access to money in her paychecks. Maybe improve her credit, save money for emergencies, save money for car down payment, pay bills, borrow money to get a car. The next question, what products or services do you think could help her address each of her needs? Here are some of the possibilities. To improve credit, she may be able to get a credit building loan, secured credit card, or a store or gas station credit card, pay her bills on time, and/or reduce her credit card debt. To save money for emergencies, she can open a savings account or a money market deposit account. A CD is probably not a good idea here because her money will be tied up for a fixed period. She can also save money on a prepaid card with a savings or purse feature. To save money for a car down payment, she can save money in a CD or money market account. Since she doesn't need that money for about a year, she should try to get the highest rate of interest possible. To pay bills, she can open a checking account and write checks, use her debit card, use an automatic debit, or use online bill pay or mobile bill payment. She could also use money orders or a reloadable prepaid card. To borrow money for a car, she can apply for an auto loan. Next question. Where can she get each product or service you've identified? For the ones I mentioned, credit building loan, you can go to a bank, credit union, or community development financial institution. For secured credit card, to a bank or credit union. A store, restaurant, or gas station credit card, you can go to a store, a restaurant, or gas station. A savings account, CD, and money market account can all be found at banks or credit unions. And a checking account and debit card at a bank or credit union, online or mobile bill pay at a bank or credit union, or business that specializes in making online payments, a third-party service. Now, money orders you can get at a bank or credit union, a post office, a convenience store, and some other locations as well. Reloadable prepaid card you can get at a bank, a credit union, a retail store. And a credit card you can get at a bank or credit union, an auto loan at a bank or credit union, or a car dealer. Please turn to page 9 in your participants guide. My Financial Management Needs. Please complete this worksheet. You can pause the presentation and then return. Welcome back. I hope you were able to identify some of your financial needs by using this checklist. And ask yourself, what other financial management needs do you have? What financial products or services do you think will help you address each need? And finally, where can you get the financial products or services you need? Now turn to page 10, My Banking Checklist. Now that you've thought about your needs and what financial institutions offer, it's time to start thinking about where you will do your banking. And shopping around can really pay off. Different financial institutions offer different things at varying costs. Finding the right financial institution starts by making sure it has the products, services, and features you need or want. There are 6 sections in the banking checklist. They are designed to help you compare products, services, and features of 3 different financial institutions or different products from the same financial institution. Those sections are My Needs and Access, checking accounts, reloadable prepaid cards, and other transactional accounts, savings accounts, debit cards and ATM cards, overdrafts and overdraft fees, and other available services. Now is your chance to go through and use this checklist. So, you may want to compare 3 different financial institutions. Start with this first checklist part, section 1, My Needs and Access, and go through each of these questions and answer yes or no. Is the institution insured by the FDIC or NCUA? If the institution is a credit union, am I eligible to join? And so forth. And then you move on to the next section. Here's section 2, checking accounts, reloadable prepaid cards, and other transactional accounts. For 3 financial institutions, you would write in and answer each of the questions. First one, minimum open deposit. Next, minimum monthly balance. Next, will my money earn interest? If so, what is the annual percentage yield, or the APY, and what balance do I need to maintain to earn interest? And then just answer each of the additional questions on there so that you can compare. Okay, for savings accounts, you just have a few questions. Minimum open deposit, minimum monthly balance, what is the APY, and what balance do I need to maintain that to get interest? And what fees might I have to pay every month, and what other fees are there? So get a fee schedule. You'd fill in those, and if you have any additional item, you would include that on there, again, for those 3 financial institutions. The next section, debits and ATM, or automated teller machine cards. Will I get a debit card or an ATM card, and when? You put that in there. Are there rebates or bonuses or other rewards for using the debit card? Can I set up alerts and some of the details about that, about how? And what fees might this card have? And of course, ask for a fee schedule that's related to that. And then you again have a other section if you need to add something else to that. Here on the overdrafts and overdraft fee section, a reminder, overdraft occurs when a transaction goes through, but there's not enough money in your account to cover the transaction. Questions to ask. What are the overdraft practices that come with the account? Will the institution authorize and pay overdrafts caused by checks or other transactions using my account number and automatic bill payments? If I opt in to overdraft program, will the institution authorize and pay overdrafts caused by ATMs and making everyday debit card transactions? And just answer all the questions there so you can compare. And again, it has an other section as well if you need to add an additional item. And the last section here, person-to-person payments. Can I transfer money directly to another person? How does the service work, and how quickly would the recipient receive my payment? And again, you'd want a fee schedule to compare those. Money orders. Can I purchase money orders? A fee schedule you'll need. Remittance transfers. Can I send money to a person or business in another country? Ask about a specific country if one's important to you, and ask for a fee schedule. And have a couple more items on there to answer as well, and an other category. Hopefully with this checklist, you will be able to come up with your best choice of how to meet your needs with financial institution and products. Now we will discuss opening a savings or checking account at a financial institution. What are some reasons a person might want to own a savings or checking account? Take a couple moments to write some ideas down, and then you can restart the presentation. Welcome back. Some items include safety and security from federal deposit insurance, earning interest on your money, depending on the account, convenience in paying bills or paying bills for routine transactions such as buying groceries, ability to build a relationship with a financial institution that may be useful when you need to borrow money, important consumer protections such as those that protect you in the event of unauthorized transactions on your account. Now turn to my checklist for opening a savings or checking account in page 15 of your participant's guide. You can use this resource after today's training to review the process for opening a savings or checking account at a financial institution. Let's review some of the information from the Apply It together. How many of you have ever opened a savings or checking account? There are some basic steps to setting up an account. Completing the application will usually ask for your full name and possibly any other names you may have used, such as a maiden name or former name, your date of birth, your address, which is generally your residential street address. If you don't have one, ask what else will be accepted. For example, you may be able to provide the residential address of a relative or other contact individual. Your social security number. If you're not eligible to have one, generally because you're not a U.S. citizen, you could provide a certain other number such as your individual taxpayer identification number or foreign passport number. Your phone number and email address, of course, if you have one. You'll need identification that helps banks comply with federal law. Frequently, you get asked for your state issued driver's license or ID card. You may need to provide a second piece of identification, such as a piece of mail addressed to you at your current address, or a copy of your current lease to help prove you live where you say you do. If you're opening an account online, you may have to answer several challenge questions to help you verify to say who you are. These questions are generated from information in your credit report or public records. For example, you may have to answer multiple choice questions asking what street you've lived on before. If you cannot answer the question accurately, the website will indicate what to do next. You will need to make your first deposit in the new account. The amount required will vary. If you're opening an account online or through a mobile app, the process may vary. You might be able to make your first deposit by transferring funds from another account, or you may need to visit a branch. You also may need to sign several documents. If you're opening an account online, you may be able to sign electronically the documents, so you don't need to return any papers. You may need to activate account tools, which could include online account access, a debit, or an ATM card. If you're opening a checking account, you'll likely be asked if you want to opt in to a program to handle overdrafts caused by ATM and point-of-sale transactions. We'll talk a little bit more about that later in this training. You will receive information called disclosures. These disclosures explain key facts you'll need to know about the account. Ask for help if you don't understand something in the information you receive. The process we just discussed assumes that the person applying for the account is approved for the account. However, not everyone is approved. Some consumer reporting companies keep track of negative information related to how consumers use their deposit accounts. Examples include checks systems and early warning. These companies prepare reports often referred to as banking history reports. Financial institutions may use these reports to determine if they will allow someone to open an account. Banking history reports include information on unpaid negative balances on accounts. This could happen because checks were written for more money than was in the account, sometimes called writing bad checks or bouncing a check. It could also have happened if an account owner did not close an account after they stopped using it and fees continued to be charged. Suspected fraud related to accounts is another reason. Certain accounts closed by a financial institution, such as if an account owner mismanaged it. Now you have the right to one free report from each nationwide consumer reporting company every 12 months. You can also request a free report if your application for an account is turned down because of the information in one of these reports. If a financial institution bases its decision not to open an account for you on information on a consumer report, they will tell you how to request a copy of the report they used, and you have a right to file a dispute to correct errors. Turn to Apply It, Getting My Banking History Reports on page 17 of your participant guide. You can use this resource after today's training to get your banking history report. Unlike credit reports, banking reports generally contain only negative information. You will likely not have a banking history report if there is no negative information on file. Turn to Apply It, Filing a Dispute on My Banking History Report on page 18 of your participant guide. You can use this resource after today's training if you find incorrect information in your banking history report and want to file a dispute. There are 3 steps. Step 1 is to file a dispute with a consumer reporting company or companies reporting the error. Step 2 is to file a dispute with a financial institution that provided the information you dispute. Step 3 is to recheck your banking history report to make sure the error was corrected and stays corrected. Turn to Apply It, My Options for Opening an Account Despite Challenges on page 21 of your participant guide. Let's review this Apply It together. You can follow along in your participant guide. You can also use this resource after today's training to identify options for opening an account if you experience challenges in opening one in the past. If you think you do not have enough money to keep in an account, or if you think account fees are too high, ask a financial institution about low-cost account options. There are many banking options that do not include costly fees. Some financial institutions offer low-cost accounts with a low minimum opening balance, perhaps even $5. Some financial institutions offer checklist checking accounts that can't be overdrawn, so there are no overdraft charges. The FDIC's Model Safe Account template details what a cost-effective account could look like. You can go to fdic.gov and search for safe accounts to learn more. To find out if accounts that you match what you need, a good first step can be talking to a financial institution employee about what you need in an account and how you expect to use the account, and what they can offer to meet those needs. Be sure to understand what you may need to do in order to avoid fees. For example, a monthly service fee may be waived if you set up direct deposit. Sometimes low-cost accounts are available in a branch but not online. And sometimes they're available online and not in a branch. If you have a negative banking history report, you may be able to get a second chance checking account. These accounts may have special fees or rules. For example, before you get the account, you may have to pay fees you owe for an account you've had before. You may have to complete a money management class. So talking to a financial institution employee and asking them about options is a good first step. If your application for an account was denied because of negative information in your credit reports or low credit scores, ask the financial institution for options. For example, you may be able to improve and build your credit with a credit building loan or a secured credit card. Your timely payments are reported to one of the national credit reporting agencies, which helps improve your credit. Credit building loans are usually small loans of $1,000 or less from financial institutions. You repay them through regular scheduled payments for several months. Secured credit cards may also be available. They're usually relatively low credit limits. To get a secured credit card, you must make a deposit with a financial institution issuing the credit card. For example, a card with a $500 credit limit, you might have to deposit that amount into the savings account at the financial institution offering you the card. To help improve your credit score, make credit card payments by the due date and keep the balance on the card well below the card's limit. If you're not sure of the best way to improve your credit, you may ask for help. You can consult with a reputable credit counseling service. It can help you develop a customized plan to improve your credit. For suggestions on finding a reputable counseling service, search for the phrase credit counseling at usa.gov. If you don't have a Social Security number, you may be able to apply for an individual taxpayer identification number with the Internal Revenue Service. Also, if you don't have a U.S. government issued Social Security number or ITIN, some financial institutions will accept a passport and country of issuance or other government issued identification. If you cannot open a particular account, ask if you can open another type of account. You may also want to consider getting a prepaid card. Prepaid cards work like debit cards, but they're not linked to an account. You don't need an account at a financial institution to get a prepaid card. Now we'll discuss how to manage savings and checking accounts. Let's start with savings accounts and then we'll cover checking accounts. Some of the information will be the same, but there are important differences. You can use a savings account to build your savings by depositing money into the account and keep it there to earn interest. Depending on the financial institution and the account, you may be able to deposit money in person, using direct deposit, transferring money from another account, at an automatic teller machine, ATM, online, using a mobile app. The options you may have to withdraw money may include in person, transferring money to another account, at an ATM, online bill pay, or mobile banking. Savings accounts are designed to save money for the future. They often offer higher interest rates than checking accounts that pay interest. They are not designed to be used for frequent withdrawals. Financial institutions will generally require you to pay a fee for going over a certain number of transactions within a month, or you may not be allowed any transactions over the limit. Federal law limits withdrawals from savings accounts to 6 withdrawals or fewer per month. Some financial institutions may have a lower limit on the number of monthly withdrawals. If you want to use an account for paying bills and making purchases, a checking account is likely a better choice. Many people choose to have both a savings and a checking account, which are often linked to make it easier to transfer between the two. Turn to Apply It, Managing My Savings Account on page 24 of your guide. Let's review some of the information in the Apply It Now. You can follow along in the guide. You can also use this checklist after today's training to help you manage your savings account. There are several ways to manage a savings account. Read the rules of your account. Be sure you understand the fees, such as for going below the minimum balance or making too many transactions from the account. Ask questions if you're not understanding something. Keep track of your deposits and withdrawals. You can keep your own records each time you deposit or withdraw money. You can also keep track of transactions scheduled to take place in the future, such as automatic deposits or automatic withdrawals. A paper-based log or an app on a mobile device can help. You may also be able to use online and mobile banking to keep track of your account. Review your account statements. You might receive your account statements monthly or quarterly. Some financial institutions also give you the option of reviewing them online. If they give you this option, you may have to pay a fee for a paper statement. However, if you need a paper copy of your statement as a reasonable accommodation, ask for that. If there are any deposits or withdrawals on your statement that don't look right, or you know you did not make, tell the financial institution right away. Set up email or text alerts if possible. Many financial institutions make it easier for customers to keep track of their accounts by offering email or text message alerts when balances fall below a certain level, when there's a transaction over a certain amount, or when a transaction is made outside the United States. Stay safe online. Make sure websites are secure and only give personal information to encrypted websites. Assume public Wi-Fi is not secure and make sure your passwords are secure. There's more information in the Apply It, Staying Safe Online. Go to onguardonline.gov to learn more about staying secure online. There's generally more to keep track of when managing a checking account compared to managing a savings account. This is because checking accounts are designed to be used frequently for multiple transactions. People use checking accounts to deposit money, pay their bills, and make purchases in person and online, and access cash. When you open a checking account, you may get a debit card, an ATM card, checks, or some combination of those, or perhaps none of those. It depends on the account. A debit card, also known as a bank or check card, can be used instead of cash to make purchases. Unlike a credit card, the money comes directly from your financial institution account. ATM cards allow you to use ATM for various account transactions. You might also be able to make some purchases with an ATM card. A check is a document you can complete that tells your financial institution to pay money from your checking account to someone else, called the payee. You need to be careful of overdrafts. An overdraft is when your account transaction goes through even though you do not have enough money in your account to cover it. Examples of how you might overdraw your account include: you make an ATM withdrawal for money more than is in your account. You make a debit card purchase for more money than is in your account. You write a check for more money than is in your account. You authorize a vendor, such as a phone company, withdraw money from your account, perhaps to pay a bill, and you don't have adequate funds to cover the full amount. Financial institutions offer programs to cover overdraft, ATM, and debit card purchases. Under federal rules, you choose whether to opt into a program that your financial institution may offer for overdrafts caused by ATM card and debit card transactions. If you opt into the overdraft program, the bank may honor an ATM or debit card transaction of more than your account balance. Expect to be charged a fee for process that transaction. It could result in a $5 purchase costing you an extra $35 or more. If you do not opt in, the financial institution will decline your ATM withdrawals and debit card transactions if you do not have enough money in your account to cover the withdrawal or purchase. The financial institution will not charge you a fee if the transaction is declined. For checks and other types of payments, such as automated payments set up to pay bills, your financial institution chooses whether to cover the check or transaction that could cause you to exceed your balance. If the financial institution decides it will cover the transaction, expect to be charged an overdraft fee. If the financial institution decides not to cover the transaction, it may charge you a non-sufficient NSF fee, and the merchant may also charge you a return check fee. These fees can vary, but fees of $30 or more are common. Now there's a table on page 26 of your participant guide that summarizes just what I went over about overdrafts and fees. There are other features associated with checking accounts to consider: direct deposit, automatic bill payment, and automatic debit. Direct deposit allows your money to be safely and securely deposited into your account at a financial institution electronically. With this feature, you don't have to worry about finding time to make deposits in person. Many employers offer direct deposit for paychecks. Using this service may also help you save money. You might be able to set up direct deposit to have a certain amount from each paycheck automatically sent to your savings account. Automatic bill payment lets you schedule and send payments electronically through your financial institution. Payments can be set up one time or recurring, which means they happen on the same day or date according to a schedule you select. That could be every week, 2 weeks, month, or something else. You can also set up automatic debit. This option allows you to give permission to a merchant or lender to take payments from your account one time or on a recurring basis. If you need to stop payment, contact the company you are paying to revoke authorization. This may take some time. You can also contact your financial institution and issue a stop payment if the merchant or lender is still processing your request to revoke authorization. You should do this at least 3 days in advance of the payment and expect to pay a fee for this service. The key to using automatic bill payment or automatic debit is to make sure you have enough money in your account to cover the payments when they are made. You may want to make a list of all your payments and which ones you set up as automatic bill payment or automatic debits and on what schedule. If you do not have enough money in your account to cover the payments when they're made, you'll have to pay fees associated with the overdraft coverage if you have it, or your payment will be declined. This could result in being late on paying your bills. Turn to Try It, learning the parts of a check on page 27 in your participant guide. Some people prefer or need to write checks while others do not. In fact, some people have a checking account that does not allow them to write checks. They use a debit card and other electronic methods to access their money. And many people receive checks from others at some point. Whether you plan to write checks or just receive them, it's important to understand the information that's on them. Look at this check and identify what each of these items are on this check. Write those down. For instance, what's number 1, number 2, and so forth. When you've written all those down, restart this presentation, and then here's your answers. Welcome back. Number 1, your name and address on the person who owns the account. So if this were your account, your name would be here. Number 2, the date the check was written. Number 3, the number of the check. Checks come in a series. You may be contacted by your financial institution if your checks are out of order, like using check number 300 before using check number 200. Number 4, pay to order of. This is the payee, the person or business being paid by the check. That's the person with the right to cash the check. The amount of check is number 5. It's used writing numbers. The amount of the check number 6, using words. It's the best to make sure there's no room to write anything else on this line. So draw a line from the end of your words to the end of the line. This is sometimes called the legal line. If the amount of the check written in the numbers does not match the amount written in words, the financial institution will generally use the amount that's written in the words. Number 7 is your financial institution's name and address. And number 8, the for line, often called the memo line. This is where you write notes to yourself or the party you're giving your check to. The financial institution does not use this information you write here. For example, you might write your utility company account number on a check you use to pay a utility bill. Number 9 is your signature, or in this case, Maya's signature. Number 10 is a banking route number. This is not unique to your account. It identifies the financial institution that issued the check. You also need this number to set up direct deposits and automatic payments. Number 11, your account number. This is unique to your account. This tells the financial institution which account the money comes from. You need this number to set up direct deposits and automated payments. And number 12, the check number. Not all checks will have the check number. Repeat here. Turn to apply it, managing my checking account on page 28 of your guide. Let's review some of the information from this Apply It together. You can follow along in your guide. You can also use this checklist after today's training to manage your checking account. These guidelines can help you manage your checking account. Many of these items are the same as the checklist for a savings account. Read the rules of your account. Be sure you understand the fees, including how you can avoid them. You may have fees for things like going below minimum balance, overdrafts, and ordering new checks. Keep track of your deposits and withdrawals. If your account provides online or mobile access, you can use a mobile app, your financial institution's online banking system, or another program to regularly track your checking account use. It usually gives real-time or almost real-time information. However, sometimes transactions may not show up online or in the mobile app immediately, or they may show up as pending. They may or may not be subtracted from your balance yet. For example, often the tip you add to a restaurant bill you pay with a debit card may not show up online or be subtracted from your account for days after the meal shows up and is subtracted. It's important to realize the account balance showing online or in your mobile app may not reflect all purchases or payments you already made. You can also keep record each time on your own of when you deposit and withdraw money. You may receive a small booklet called a transaction register to help you keep track of your transactions, or also called a check register. If you do not track your account online or with mobile access, you can use the transaction register to track transactions. Some individuals prefer to use the register even if they have online access. If you choose to use a transaction register, record each check you write down and each deposit you make, each ATM withdrawal you make, every automatic payment you authorize from this account, every purchase or cashback transaction you make with your debit card, and every fee you are charged. Review your account statements. Make sure you recognize each deposit or withdraw on your statements and tell the financial institution right away if you see any errors. Don't be afraid to question small transactions you don't recognize. Identity thefts often make small charges using stolen debit card information to see whether your account is good to steal from. If you don't notice the small transactions, they may take a big one the next time. Keep track of holds on your debit card. If you use a debit card for certain transactions, like at a gas station, to make a rental car reservation, car riding service, or pay for a hotel stay, an authorization hold may be placed on your funds. Although this is typically a low amount, these amounts can vary and need to be aware of them. This reduces the money available in your account until the hold is removed. Depending on the business, an authorization hold may last up to 15 days. Set up email or text alerts. You may be able to have alerts sent to your email or text for a wide range of events, even if you do not regularly use mobile banking. Alerts can include balances falling below a threshold set, deposits or withdrawals, debit card purchases, ATM withdrawals, withdrawals when the debit card was not present, foreign transactions. Ask about linking accounts. Ask your financial institution if you can link your checking account to your savings account or a line of credit and automatically transfer money between accounts if you empty your checking account. The transfer fee may be considerably less than an overdraft fee. If your accounts are linked, It is even more important to review statements and transactions for fraud. If someone gains access to one of your accounts, they may be able to access all your linked accounts. Protect your debit or ATM card. Be wary of unsolicited calls or text messages asking for your card number or personal identification number, called a PIN. If you lose your card or you notice unfamiliar purchase on your statement, report it to your financial institution immediately. You may also be able to lock your card online. This will prevent further use until you can unlock it and receive a replacement card. However, you must contact your financial institution right away if your card has been lost or stolen to minimize losses. Stay safe online. The online safety measures we discussed for savings account also apply to checking accounts. You may receive an ATM card or a debit card from your financial institution. Let's talk about ATM cards first. ATM cards allow you to use an automated teller machine for various account transactions. The money you withdraw comes from your financial institution. Ask your financial institution if you can use your ATM card to make some purchases. When you use your ATM card, you'll be prompted to type in your personal identification number or PIN. Avoid sharing your PIN with other people. An ATM may allow you to get cash by making withdrawals from your account, check your account balance, deposit money into your account by inserting cash or checks into the ATM, transfer money, such as transfer of funds from your savings account to your checking account, make some payments, such as a payment on a credit card you have through a financial institution. When you use an ATM that is not affiliated with your financial institution, you may pay a fee for some transactions. The ATM will notify you of fees and prompt you to accept them before you make your transaction. Know which ATMs you can use without paying fees. You can ask your representative of your financial institution for that information or check if the financial institution's website includes a map or listing of ATM locations. ATMs have various accessibility features that may include braille numbered keypads, large print, and high contrast screens and keypads, height and shape that accommodate people who use wheelchairs, and audio features. Explain what features you need in an ATM to your financial institution to learn how they can meet your needs. Keep safety in mind. Thieves sometimes target ATMs. If anything about an ATM or the people in the area looks suspicious, avoid using it. Contact your financial institution immediately if you lose your ATM card, you're worried that others know your PIN, or other concerns related to your ATM card. We've talked a little bit about debit cards already. A debit card could be used for everything an ATM can be used for. Plus, it can be used to make purchases. Debit cards look like credit cards because they have a credit card logo, such as American Express, Discovered, MasterCard, or Visa. However, they're not credit cards. When you use your debit card, the money is taken out of your financial institution account. Some retailers may allow you to process a transaction using debit card as debit or credit transaction. That simply refers to the network that processes the transaction. Choosing a credit transaction with a debit card does not mean you're using credit. The money still comes out of your checking or savings account. Mobile applications or apps and other web-based services allow person-to-person or P2P money transfers. Typically, users link the mobile payment system to their bank accounts or credit card accounts and initiate transfers of funds to others who are also users of the same app or web-based service. Using an app for P2P payments is one way to handle everyday money transactions with other people, such as paying a babysitter or reimbursing a friend for lunch. There are several different P2P systems and they work differently. One may let you transfer money after logging into a website. Another may let you transfer money by physically touching your phone to another person's phone. P2P payments is a rapidly changing area of financial services. Keep these things in mind if you're using P2P apps or thinking about using them. Is it federally insured financial institution? If you're interested in using P2P payments, ask your federally insured financial institution whether it offers the service. And if yours doesn't, try other financial institutions. While several non-financial institutions companies offer P2P payments, there can be benefits to working with a financial institution, such as an opportunity to maintain a financial relationship and obtain other products and services at reasonable rates. Another potential benefit is that the funds are federally insured, which may not be the case with a non-financial institution P2P account. Fees. There are numerous possibilities. Is there a fee to sign up? A fee to send money? A fee to receive money? Is there a single fixed transaction fee or a service fee, or is it calculated as a percentage of the transaction amount? Shop around to find service with costs that seem reasonable. If you are the recipient and the fee to receive the money seems high, don't be shy about telling the sender you'd prefer to be paid another way. Privacy. Be aware of the service's privacy practices and how your information and that of your recipients will be used. If you decide to use the service, set all available privacy settings to your preferences. Some service providers may, for example, share certain aspects of your transaction activity with other users, such as your social media friends. If you don't want this to happen, evaluate whether the service provider's privacy settings allow you to turn off that feature. Because P2P service providers' privacy practices can change, periodically check its policies and your privacy settings to ensure that they're set in the way that you want. Funds availability. Know when the money you send will be charged to your credit card or deducted from your account. Also be clear on when that money will be available to that recipient. Your rights and disputes resolution. Know what the service provider's user's agreement says about resolving errors and disputes. For example, what will happen if the service provider pays the wrong person or the wrong amount? And what if you cause the error by mistyping the recipient's email address or the amount you wanted to send? That can happen easily, and especially when you're typing on a small cell phone. If the payment is drawn from your checking or savings account or credit card, you have rights under the federal law to have the error resolved. But if the payment comes from somewhere else, like funds you have on hold in an account with a payment service provider, you might not have the same legal protections. Instead, you might have to rely on the provider's own policies or perhaps state laws that apply to money transfers. In any case, find out what the service provider's user agreement says will happen if something goes wrong. A mobile wallet is a type of mobile application that some people like to use along with a debit card. You enter information from your debit card into the app and use your mobile device to make point-of-sale purchases instead of using the debit card. You can also use mobile apps to make purchases using a credit card or prepaid card. Visit onguardonline.gov for tips for keeping your mobile device secure. We'll now discuss how prepaid cards work, common features of prepaid cards, and how to use them effectively. A prepaid card is different from a debit card. A prepaid card is not linked to an account at a financial institution. Instead, you're using money that has been loaded onto the prepaid card in advance. You may decide to get a prepaid card if you cannot open an account at a financial institution. They offer the same convenience as a debit card, and you don't have to carry cash. Or you may decide to get a prepaid card as a gift for someone instead of giving them cash. Or someone may have given you a prepaid card as a gift. You usually load money onto the prepaid card in person, by phone, online, or through a mobile app. The money loaded onto the card can come from direct deposit of your pay or benefits or transfer from a bank account or another prepaid card. Or you may be able to load money onto your card using cash at a retail locations or at financial institutions that provide the card. You may be charged a fee for some ways of adding money to your card and not for other ways. Most cards do not allow you to spend more money than is loaded onto the card. Some people might find this helpful as a safeguard against accidentally spending more money than they have. Prepaid cards are widely available from financial institutions and other businesses. You can purchase them online or in person. To access all of the prepaid card's features and benefits, you must register the card. These features and benefits might include protections related to loss or theft of your card. Registration is not the same as activating the card. Follow the instructions on the card or the packaging. You'll be required to provide personal information that includes your name and date of birth. Many prepaid cards have a network logo on them, such as Visa, MasterCard, American Express, or Discover. These cards can be used at any location that accepts debit cards displaying the network logo. This includes ATMs. Let's look at the general kinds of prepaid cards. A reloadable prepaid card is a card that you can add more money to. This type of card is sometimes called a general purpose reloadable card. Some cards start as non-reloadable but can be reloaded once you complete a registration process. A payroll card is a prepaid card you get from your employer. Your pay is loaded onto it. An electronic benefits transfer or EBT card is a prepaid card used by government agencies to pay certain government benefits such as disability benefits or unemployment insurance. These may be also called government benefit cards. Some colleges or university identification cards are also prepaid cards. Some prepaid cards can only be used at certain locations. For example, some prepaid cards can only be used at a specific store or on a certain public transportation system. These cards generally do not have a network logo on them. Turn to Try Features of Most Reloadable Prepaid Cards on page 35 in the Participants Guide. You're going to now take a few minutes and check yes on the items on the checklist that you think are a feature of prepaid cards, and no if you don't think it's likely to be a feature. Assume the network brand is accepted by the vendor in each scenario. And go ahead and pause the presentation and return when you've completed that. Welcome back. So here are some of the answers. Features of most reloadable prepaid cards. You can use it in a restaurant to purchase a meal. Yes, assuming there's enough money loaded on the card for the transaction. However, not all restaurants will accept prepaid cards to pay a meal. You can get money out of an ATM with it? Yes, again, assuming there's enough money loaded on the card for the transaction. You can use it to build credit. Answer is no. Generally, you're not borrowing money with prepaid cards. You can make a hotel reservation with it. Yes, again, assuming there's enough money loaded on the card for the transaction. However, not all hotels will accept prepaid cards for reservations. You can buy groceries with it. Answer is yes, again, assuming there's enough money loaded on the card for the transaction. You can only load money onto it where the card was purchased. No, you can likely load money at other locations that sell the card online and through mobile apps. You can have funds directly deposited into it. Yes, some reloadable prepaid cards do. You must have a good credit score to get it. No. You can build savings on it. Yes, for some reloadable prepaid cards. You have FDIC insurance on its fund if certain conditions are met. Yes. If these conditions are met, your funds will be insured up to the limits provided by FDIC. The prepaid card must be registered with the card issuer so the FDIC can identify the cardholder. The account records at the FDIC insured bank that issued the card show that the prepaid card provider is serving as the cardholder's agent. The records at the FDIC bank or other party show the identities of the actual owner of the funds such as you, the cardholder, and the amount owned by you. The contractual agreements among the bank, the prepaid card provider, and the cardholders indicate the individual cardholders are the owners of the fund. Remember, FDIC insurance protects your funds only if the bank holding the funds fails. It does not protect you from losing money if your prepaid card is lost or stolen. You can borrow money with it. The answer is no. You can set up text or email alerts to monitor use of it. Yes. You can view the card account history online if you register the account and activate the online feature. The answer is yes. Turn to Try It. What fees are common to reloadable prepaid cards on page 35 of your guide. If you use prepaid cards, be sure you know what fees you might have to pay and how you may be able to avoid them. You can find this out by reading your cardholder agreement. Often this is on the packaging when you buy the card. You can also review the information online at the provider's website. Not all cards have all fees, but let's look at some fees you may see as you're shopping for a prepaid card. Take a look at this list and put a check next to the prepaid card fees you think are charged by at least some prepaid cards. Go ahead and pause the presentation and begin when you've completed that. Welcome back. All fees listed are real fees, at least for some reloadable prepaid cards. So, understanding the fees of prepaid cards that you have and are considered getting, and understanding the packaging, and it's a great place to start by going to their website. Other things to note: monthly fee. A monthly fee is a fee you pay each month even if you don't use the card. The fee is automatically deducted from the balance on the card. Some cards that charge a monthly fee may waive the fee under certain circumstances, such as if you have your pay or Social Security benefits directly deposited onto the prepaid card. Transaction fee is a fee charged every time you use the card for certain types of transactions, such as making purchases or loading money onto the card. Some cards let you choose between a plan that charges transaction fees and one that does a single monthly fee. Account or card reload fee. A cash reload fee is a fee for adding money to your card. If you add money to your card at a retail store, you'll likely pay a fee. Prepaid cards also provide other options for loading money onto your card, such as direct deposit, maybe without a fee. Bill payment fee. Some prepaid cards providers let you sign up to pay your bills online through their website. Your card provider may charge a fee each time you use a program to pay a bill. ATM withdrawal fee. You may incur this fee when you withdraw money at ATM that is not free for you to use. Balance inquiry fee. You may be charged a balance inquiry fee if you check your prepaid card balance at an ATM, or if you call customer service to ask your balance. Most cards offer at least one free way to check your balance. For example, you may be able to check your balance online for free and request the balance information by email or text for free. Additional card fee. Some prepaid card providers let you get an extra card for another person you designated as an authorized user of your card. That card lets someone else spend your money, so you want to think carefully about whether to add an authorized user to your prepaid account. You may also have to pay a fee for the additional card. Inactivity fee is a fee charged if you don't use a card for a long time. The time that triggers inactivity fee varies. Lost or stolen card replacement fee. Your prepaid card provider may charge a fee to replace your card if it's stolen, lost, or damaged. Fee for canceling your card. You can cancel a prepaid card at any time. Usually don't pay a fee to cancel your card, but there may be a fee to get a check for the remaining balance on your card. Turn to Try It, a prepaid card or bank account on page 36 of your guide. Read the scenario and then answer the questions. Pause this presentation and return. Welcome back. Let's review. Why might Lucia want to use a reloadable prepaid card instead of opening a bank account that provides a debit card? She may not be able to open an account at some financial institutions because she can't yet verify her identity using traditional methods. Or she doesn't need to have an account at a financial institution in order to get a prepaid card. She needs an account to get a debit card. A reloadable prepaid card may give her some experience with a U.S. banking system. She may have a record of her transactions if she registers the card and activates the online statement options. A prepaid card is easy to purchase. The money on the card can be insured by the Federal Deposit Insurance Corporation, providing her with safety and security. However, she needs to make sure all the requirements we've discussed previously are met. She can't overspend. She can only spend the money that she loads onto the card. Second question, why might Lucia want to open a bank account and use a debit card instead of using a reloadable prepaid card? Possible answers. Opening an account can establish a relationship with a financial institution. She may be able to access other products and services in the future, such as a loan. Her money will be federally insured, providing her with safety and security. The FDIC insures banks and the NCUA insures credit unions. A bank account can give her greater experience with the U.S. banking system. A bank account provides options for paying bills, like debit card, checks, automatic bill payments, and she'll need to make sure she keeps track of her transactions so she does not overdraw the account. Even with overdraft protection, overdrawing her account can become costly. Turn to apply it, reloadable versus debit. Which card is right for me? Page 37 of your participant guide. You can use this, apply it, after today's training to compare a reloadable prepaid card and a debit card to help you figure out the right option for you now. If your card is lost or stolen, or you notice a charge on your statement you did not make, report the problem right away to the card issuer. That can help you avoid further losses. If money was already taken from your card, network branded prepaid cards usually give protections for loss or theft, but check your card provider's website or your cardholder agreement to find out the specifics. You generally must register your card to get the protections offered by the issuer. Consider these tips for using prepaid cards. Review your account transaction history and dispute any charge you did not authorize. Understand your card's limits, such as maximum amount of money that can be loaded onto the card and other limits relating to the reloaded funds and any limits to purchase or withdrawals. Know what fees will be charged and what you may be able to do to avoid them. Report a loss or theft immediately. Stay safe online. Visit onguardonline.gov. Remember these key takeaways from today. Financial products, services, and providers. Consider your needs and shop around for financial products and services. Regarding opening an account, know the general process for opening a savings and checking account, including options if you're initially unable to open an account. Under managing an account, learn the rules of your account and keep track of how to use it. This can help you keep costs down and develop a positive banking relationship. Prepaid cards allow you to spend or access your money loaded onto them. They usually aren't linked to a checking or savings account. Before you use one, review its features and fees. You are more likely to act if you commit to acting now. Consider writing down what you intend to do based on what was covered during today's training. Please take a few minutes to answer the questions under Take Action on page 39 of your participant's guide. How will I do it? What will I do? Will I share my plans with anyone? If so, who? On page 43 of your participant guide is the post-training survey, which includes the knowledge questions and then the feedback. The actual feedback, you'll need to email it back to us if you'd like us to get that information. The knowledge questions, here are the answers. For number 1, it's not important to shop around for financial products, services, or providers. The answer is false. For number 2, if you have negative banking history report or credit history, you cannot open an account at a financial institution. That answer is false. Number 3, successful management of a checking account includes understanding the rules of the account. That answer is true. Number 4, all prepaid cards charge the same fees. Answer is false. Number 5, your money in an FDIC insured deposit account, including checking accounts and savings accounts, is insured up to $250. The answer is false, up to $250,000, yes. Which of the following, number 6, will help you manage your checking account? You would choose all that apply. Well, A, B, and D applied. A being keep track of deposits, withdrawals, and debit card transactions. Number B, set up text or email alerts. And number D, use secure private internet connections for managing your accounts online or using the mobile app. Thank you for attending this training on choosing a financial institution and related services. And congratulations for those that have completed all 6 modules on the Financial Literacy series. We hope the information they provided will help you to make more informed financial decisions that meet your financial goals. For those that have not completed all 6 modules, here's our first one, Values and Money. We encourage you to take that. We'll discuss what they are, why they're important, and how they influence financial decisions. And with all of you, we wish you the best of success with all your efforts.